Imagine a city, a shimmering mirage of skyscrapers and luxury, rising from the desert sands in just a few decades, a place synonymous with ambition, innovation, and seemingly limitless wealth. But what if I told you that beneath this glittering facade, the very foundations of this economic miracle were built on something far more precarious? In this video, we're going to peel back the layers of the Dubai dream. We'll dive deep into how this desert city became a global hub, exploring the unconventional strategies, the staggering debt, and the moments it teetered on the brink. By the end, you'll understand why Dubai's story isn't just about opulent hotels and man-made islands, but about the high-stakes game of economic ambition, the hidden costs of rapid growth, and the uncomfortable truths about how financial systems really work. To truly understand Dubai, we have to go back, not to the recent past, but to its roots as a humble trading port. For centuries, Dubai Creek was a lifeline, a natural harbor where dhows, traditional sailing vessels, plied their trade. Long before oil, before tourism, Dubai thrived on commerce, often facilitated by a remarkably open approach to goods passing through its borders. This wasn't smuggling in the illicit sense we often think of today, but a historical tradition of re-export and informal trade that allowed goods, from gold to electronics, to move freely and quickly. It was a hands-off, low-tax environment that fostered a unique entrepreneurial spirit. This informal economy, this almost Wild West approach to trade, laid the groundwork for what was to come. Then came the vision. Under the leadership of Sheikh Rashid bin Zayed Al Maktoum and later his son, Sheikh Mohammed bin Rashid Al Maktoum, Dubai began to transform. They understood that unlike their neighbors, Dubai had limited oil reserves. Their future lay in becoming a global services hub. They built a world-class airport, a massive port, and free zones designed to attract international businesses. This was the blueprint. Diversify, attract talent, and build infrastructure at an unprecedented pace. But how do you fund such an ambitious vision? This is where the debt machine truly kicked into gear. Dubai's strategy was simple, yet incredibly risky. Borrow heavily, build big, and attract the world. Government-owned entities like Dubai World, Emaar Properties, and Nakheel became the engines of this growth. They weren't just building apartment blocks, they were constructing entire cities within a city, like the iconic Palm Jumeirah, the audacious World Islands, and of course, the Burj Khalifa, the tallest building on Earth. These projects weren't just about utility, they were about branding, about creating an image of unparalleled luxury and possibility. They were designed to put Dubai on the global map, to make it irresistible to investors and tourists alike. To fund this, these entities took on massive amounts of debt. Think of it like this. If you want to build a house, you take out a mortgage. Dubai was building an entire metropolis, and it was taking out mortgages on an unimaginable scale. These loans were often secured by the very land and projects being developed, and crucially, they carried the implicit guarantee of the Dubai government. Investors, dazzled by Dubai's growth story and the seemingly endless flow of money, were eager to lend. Credit was cheap, the global economy was booming, and everyone wanted a piece of the Dubai miracle. This was leverage on a grand scale, borrowing money to amplify returns, a strategy that works brilliantly when things are going up, but can be catastrophic when they turn. But here's where it gets dangerous. The sheer speed and scale of development led to a speculative real estate bubble. Property prices soared, fueled by foreign investment and a belief that they would only ever go up. Analysts, quietly at first, began to raise concerns. Was this growth sustainable? Were the debt levels too high? Was there enough demand to fill all these new apartments and offices? These were the quiet red flags, often dismissed by the narrative of Dubai exceptionalism. The feeling was, this time is different. Dubai was special, it couldn't fail. Then, the world changed. The year was 2008. The global financial crisis hit with brutal force. Credit markets, which had been so eager to fund Dubai's dreams, suddenly froze. The cheap money dried up. Construction projects stalled. Foreign investors who had poured billions into Dubai's property market began to pull back. The intricate web of debt, which had powered Dubai's ascent, now threatened to become its undoing. The image of invincibility began to crack. The breaking point came in November 2009. Dubai World, one of the Emirates' largest state-owned conglomerates, announced it needed to restructure $26 billion in debt. This wasn't just a company. It was seen as Dubai itself. The news sent shockwaves through global financial markets. Fears of a sovereign default, a government unable to pay its debts, spread like wildfire. Investors panicked, stock markets tumbled, and the carefully constructed image of Dubai shattered overnight. For a moment, it looked like the entire dream might collapse. This is the part almost nobody talks about. The world held its breath. Who would step in? Who could possibly bail out an entire city-state? The answer came from its wealthier, more conservative neighbor, Abu Dhabi. In a dramatic intervention, Abu Dhabi provided a $10 billion bailout, a lifeline that prevented a full-scale default and averted a global financial crisis that could have been far worse. It was a moment of immense relief, but also a stark reminder of Dubai's dependence and the vulnerabilities hidden beneath its dazzling exterior. The immediate aftermath was painful. Projects were halted, some indefinitely. Expatriates, who had flocked to Dubai seeking fortune, left in droves as jobs disappeared. Property values plummeted, leaving many investors with massive losses. The human cost was real. Families losing their life savings, dreams evaporating, and a sense of betrayal for those who had believed in the city's unstoppable rise. Dubai was forced to undertake austerity measures and a painful reevaluation of its growth model. But Dubai is nothing if not resilient. The crisis forced a reckoning. It highlighted the need for greater financial transparency, more prudent debt management, and a diversification strategy that looked beyond just real estate. The informal trade model, while historically significant, gave way to a more regulated and sophisticated financial ecosystem. The bailout also underscored the delicate political dynamics within the United Arab Emirates, with Abu Dhabi asserting its financial might. Dubai survived, and in many ways emerged stronger and wiser. It learned that even the most audacious visions require solid foundations, and that unchecked ambition can lead to perilous cliffs. The crisis revealed a fundamental truth about money and markets. There are no guarantees, and even the most glittering promises can hide systemic risks. It taught us that rapid growth, while exciting, often comes with hidden costs, and that the psychology of "this time is different" is a dangerous trap. So, what does Dubai's incredible journey, from a trading post to a global metropolis, from near collapse to resilient recovery, truly tell us? It's a powerful lesson in the delicate balance between ambition and prudence, between innovation and regulation. It shows us how deeply interconnected our financial world is, and how a local debt crisis can send ripples across continents. Dubai survived, but at what cost? And what does its story tell us about the true price of ambition in a globalized world? If a city can build an empire on borrowed money and a brand, only to face a near collapse, what does that mean for other nations or even our own investments that chase similar dreams? The next bubble is always invisible at first. Are we already inside one, mesmerized by the next glittering promise? Think about it. And if you want to keep exploring the hidden stories behind the world's biggest financial events, make sure to subscribe to our channel for more deep dive financial documentaries.